Hey, welcome back to YT Finance, and today we are talking about the best ETF investments which will help you safely build wealth. Some of these ETFs are the exact same investments that made me wealthy, and now I want to share them with you, especially if you have been investing for less than 5 years. The investments we will talk about today will incorporate growth, value, dividends for passive income, plus some stable, safe investments to stabilize your overall portfolio. I am super excited to share with you the top 12 best exchange traded funds, also known as ETFs, to buy in 2023. These ETFs are diversified and have a proven track record of posting top-notch total returns over 5 years. So now let me tell you about the Keystone ETF, which is going to be the Vanguard Total Stock Market ETF. This ETF is an absolute powerhouse with a 5-year average annual return of 9.4% and an expense ratio of only 0.03%. Can you believe that? It's insane. What sets this ETF apart is its breadth and success, with a whopping 3,969 stocks held as of January 3rd. Vanguard says there's no other fund that matches its diversity. Plus, it gives you exposure to both growth and value stocks. The Vanguard Total Stock Market ETF truly is the holy grail of ETFs, and it's the most useful ETF in my personal opinion, and it's one of my largest holdings. So what are you waiting for? Don't miss out on the opportunity to invest into the best of the best. Next up, I'm thrilled to talk to you about the Diversified U.S. stock fund that has outperformed the majority of other investments over the past 12 months, while also offering high dividend income to shareholders. That's right, we're talking about ticker symbol VIG. What makes the VIG ETF stand out is that it tracks the S&P U.S. Dividend Growers Index, which means it focuses on large cap stocks with a proven record of growing their dividends year over year for at least 10 years in a row. And with an incredibly low expense ratio of only 0.06%, this ETF is an absolute steal. With a dividend yield of 2% and a 5-year average annual return of 10.2%, the VIG ETF is a top performer in its category. So if you're looking for a high-income ETF with a proven track record for success, look no further than ticker symbol VIG. The next ETF is no joke, with a whopping $49.2 billion in assets under management, an expense ratio of only 0.06%, a dividend yield of 3%, and a 5-year average annual return of 8.1%. That's some serious growth potential right there. While the VIG ETF avoids the highest yielding stocks in its section pool, the VYM ETF does the opposite. But here's the kicker. VYM's average annual return over the last 5 years is more than 2 percentage points lower than VIG's. So if you're willing to take on more risk in pursuit of higher yields, VYM is the ETF for you. However, make sure you understand the potential downsides before you invest. Overall, the VYM ETF is an excellent option for investors looking to maximize their passive income returns through high-yielding stocks. Up next, let's talk about Invesco S&P SmallCap Value with Momentum ETF if you want to rev up your overall returns. With $739 million in assets, this fund targets value stocks with share prices that beat out their peers. Ticker symbol XSVM uses its unique approach to narrow down the S&P SmallCap 600 index to about 120 securities with the highest value and momentum scores. That means it selects stocks that meet its criteria for value and are moving up compared to others in the index. XSVM boasts the highest 5-year annual return of small cap equity ETFs tracked by Morningstar Direct, with a whopping 13.6% annual return. But keep in mind that momentum-style investments can be very volatile. The fund has an expense ratio of 0.36% and a dividend yield of 1.7%. So buckle up and get ready to race towards your financial goals with ticker symbol XSVM to add to your overall portfolio. Now get ready for a bullish ETF that crushed the market over the past 12 months. We're talking about the Invesco Russell 1000 Dynamic Multi-Factor ETF, ticker symbol OMFL. They posted a gain of 2.2%, while the S&P 500 lost 7.7%. So to put this into perspective, while the overall stock market was falling, as seen in the S&P 500 benchmark falling by 7.7%, this investment was still giving value to its shareholders and growing their wealth. This is going to add stability to your portfolio even during uncertain macroeconomic times. But how do they do it? Ticker symbol OMFL is built on the multi-factor index of the same name, which allows managers to prioritize certain quote-unquote factors they believe will boost the fund's performance, and so far it's worked. And with a 5-year average annual return of 13.8%, while paired with an expense ratio of only 0.29%, on top of an amazing dividend yield of 1.5%, ticker symbol OMFL is one of the best large-cap ETFs to add to your portfolio in 2023. Next up, let me tell you about a hidden gem that can spice up your investment game. It's called the CVY ETF, and it's one of the few asset allocation funds that can fill the void left by target date ETFs. With an expense ratio of 0.89% and a dividend yield of 4.9%, this is a beast that holds 85% or more of its portfolio in stocks. What makes CVY unique is that it invests into a mix of asset classes, including American depository receipts, real estate investment trusts, master limited partnerships, closed-end funds, and traditional preferred stocks. This diversification strategy allows the fund to achieve a higher yield than the S&P 500 with a dividend yield of 4.9%. Although the target date ETFs are hard to come by, you can rely on asset allocation ETFs like CVY to provide you with a similar level of portfolio diversification and therefore safety, on top of very impressive passive income. CVY's focus on aggressive allocation means that it's best suited for investors with a high risk tolerance. Now, are you looking for a fund that offers moderate risk while investing into a diversified portfolio? Check out the $1.9 billion iShares Core Growth Allocation ETF, ticker symbol AOR. This moderate allocation fund invests 50% to 70% of its shareholders' money in stocks and about 38% in fixed income. Plus, it invests in other iShares ETFs, which helps to keep costs low. AOR has an expense ratio of only 0.12% and a dividend yield of 2.1%. This is a safe investment, but just like the last ETF we talked about, you are sacrificing growth for safety here. This ETF has a 33.7% of its assets in the iShares Core Total USD Bond Market ETF, IUSB, which adds further diversification and safety to your portfolio. However, if you want a more risky ETF, then feel free to look further into the ones I said earlier. Up next, we have the iShares Core Moderate Allocation ETF, which could be an excellent choice for you depending on your own risk tolerance. With an expense ratio of just 0.15% and a dividend yield of 2.2%, this ETF is made for cautious investors because they invest only 30 to 50% of its money in stocks. The iShares Core S&P 500 ETF is the second largest holding of this fund, while iShares Core Total USD Bond Market ETF is the largest. So essentially, this ETF is putting you into two different funds, giving you exposure to the S&P 500 index while also exposing you to bonds. However, if you just want exposure to the S&P 500, feel free to look into ticker symbol VOO, which I personally own. However, for this particular ETF, it does mix bonds with stocks, giving you a very stable and safe return on your investment. So if you're looking for a low-cost and low-risk fund to add to your portfolio, iShares Core Moderate Allocation ETF might be the perfect choice for you. Investments like this will build your wealth even during stock market crashes and recessions. Now, what if this isn't your fancy? You may be looking for an ETF that aligns with your values, so look no further than ticker symbol NULG, a $984.2 million fund that seeks to invest in companies that meet certain social, environmental, and governance standards. NULG is based on the TIAA ESG USA Large Cap Growth Index and has an impressive 5-year average annual return of 12.9%, beating the S&P 500 index by over 3 percentage points. Although NULG has a low dividend yield of only 0.4%, its strong performance over the past 5 years makes up for that. So if you want to emphasize growth over dividend income, then this could be the ETF for you. On top of that, you could also sell shares to generate passive income, especially since they are growing in value so fast, much faster than other equities on the market. With an expense ratio of just 0.26%, NULG is a great option for investors who want to do well in the market and also want to see growth in their portfolio. Up next, we have the Victory Shares USAA Core Short-Term Bond ETF, ticker symbol USTB. This has an expense ratio of 0.32% and a dividend yield of 2.7%. USTB invests in investment-grade short-term bonds and has performed well due to the focus on short-term duration bonds, which are more attractive in the current environment of high inflation and rising interest rates. The fund has a size of $454.5 million and it's up nearly 1% year to date, giving investors very stable returns. So if you think you have too much risk in your portfolio and are losing money right now, investing into ETFs such as USTB could be the ETF for you. However, if you are a type of investor who is looking for an ETF to add to your portfolio that can give you a solid dividend yield and decent average annual returns in regards to their growth over the next 5 years, look no further than iShares Investment Grade Bond Factor ETF IGEB. With an expense ratio of just 0.18% and a juicy dividend yield of 3.6%, this ETF is definitely worth considering. Sure, rising interest rates have affected intermediate-term bond ETFs lately, but you can't just ignore this segment of your portfolio. And guess what? IGEB has the best average annual return among intermediate-term investment-grade bond funds over the past 5 years. And let's also talk about their overall holdings. They are rated BBB or higher, making them one of the best and safest ETFs to invest into. Lastly on our list, we have an investment that will fight against inflation. Inflation is a major concern in today's market, and it's been affecting the stock market for the past year. Luckily, there's a way to combat inflation with an ETF that's specifically designed for that purpose, and that would be the FlexShares iBoxx 3-year Target Duration TIPS Index ETF, ticker symbol TDTT. This amazing $2 billion ETF invests into Treasury inflation-protected securities, which increase the value as inflation rises. With a mandate to generally keep pace with inflation, ticker symbol TDTT focuses on short-term TIPS with a weighted average maturity of just 3.5 years. So this is meant to make sure your money does not lose value due to inflation. This would be very similar to putting your money into a high-yielding savings account that is trying to outpace overall inflation. But since you've made it to the end of the video, let me give you my personal favorite ETFs that may or may not be on this list. Clearly, number one for me is going to be ticker symbol VTI, which we started with. However, after that, if you want very stable dividend income, I would honestly invest into ticker symbol SCHD. And then for growth, I would gravitate to ticker symbol QQQ. By combining all three of these ETFs, you not only get stability from VTI, passive income in the form of SCHD, and growth regarding ETF QQQ. These are the trinity of trinities that you would want to invest into for ETFs, which will help you build wealth over the long term, surpassing any singular risky growth company that you could buy over the next 15 years. So there you have it. These are the best ETFs to buy right now in 2023. Go ahead and smash that like button for more videos just like this one. Comment down below your favorite ETFs, subscribe for more videos just like this one, and I will see you in the next YT video.